Hi everyone, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. We are glad that you all enjoyed our foray into the S&P 500 index last week, but this week we are back to basics, the FANGs. After close to 15 days of steady downwards pressure on the FANG stocks, you might think that we are getting close to finding some opportunities among this group to actually step in and buy. Unfortunately, this applies to only two of the FANGs so far, and but some things may be falling into place. But before we take a close look at the charts, I do want to say thanks to everyone who likes this video and all our subscribers. Okay, let's start off with the stocks that we like, and of course, what I might say are in our Phantom FANG portfolio. And the first one is Alphabet. Alphabet has set back from its beautiful advance towards its bubble price. I think it is still in the process of heading there, and look at that sharp upturn in the earnings forecasts, okay, and bearing in mind that these are looking out 1 year ahead, and it would appear very much as if the force is with you. Secondly, I will also take a look at the Facebook, which is also in our Phantom FANG portfolio, and again, look at the fair market value there as well. Look at the very, very sharp turn. Of course, both of these companies are fundamentally advertising companies. So with the end, hopefully the end of the COVID pandemic, therefore, and a bounce back in business, then very clearly the market and the analysts are anticipating a nice increase in the earnings, and particularly the advertising earnings of these two companies. Microsoft, well, Microsoft sort of rolled over and came right back to its HB2, but it's been there for quite a while. Now, this is not exactly what I would call a rapid grower. In fact, the balance sheet growth over the past 5 years has only been about 13.5%, and with a very tiny dividend. But nonetheless, as long as it stays there, at least it is providing you with some positive returns. Okay, turning to Amazon, well, some time ago we had a sell when the stock cut through its HB3. It did fall, but rallied back again very recently, right up to that HB3 price again. 16 times book value, but it's been unable to break through, and it has now actually been streaming down fairly rapidly. I don't know that the HB2 is going to be coming back again, or whether we're going to get another rally here, but this is what I certainly would look for, because that would offer us a beautiful opportunity for a very nice trade. Nvidia, oh my gosh, what a sweet stock this is, eh? Gave us a perfect buy back in March. And actually March of this year, not March of last year, but March of this year, at its HB3, which is about 16 times book value, had a lovely rally right up to its HB4, and now is setting back again, I think, towards its HB3. I mean, fundamentally, this stock is a Bitcoin stock, and if you look at the action of Bitcoin against Nvidia, you can see that the two of them operate pretty much very closely together. Today, by the way, with that rally in Bitcoin, Nvidia is up about some $20. However, we are not terribly optimistic about Bitcoin, and I think we are going to get a revisit to the HB3 and possibly another nice trading opportunity. Netflix, well, what can I say about Netflix that I haven't said before? We had a sell signal way back early in the year, and now we have another one at the HB3. Here, of course, is a company which is now meeting a lot of competition, and its visible growth rate of its new subscribers is slowing down. I suspect that this company may have miles to go on the downside if the return on equity, if the profitability of this company begins to slide as well. However, that's a story for another day. Looking at Apple in the short term, we have got a violation of the HB5, and it looks very much to me as if we've got a confirmed trading sell signal on Apple, and in which case, by the way, the target on the downside would be the HB4. Well, have we seen this before? Well, actually, we have. Early in the year, Apple, here at this peak here, actually reached its HB5 price. Now, of course, you can't see that anymore. And it fell from there down to its HB4. And, of course, you don't see that either. What is the issue? Well, look at the slope of the structural lines, okay, of the HB5 price. Back in the beginning of the year, okay, those structural lines passed through this peak in Apple stock, and could have been used as a good trading signal on the downside. And where did it fall? Well, the stock fell precisely down to its HB4. But when we got the new balance sheet in with all of those share buybacks, it has completely changed the picture of this company altogether, which is why actually you need to kind of have a running video of these kinds of stocks, because the balance sheets can alter the signals quite profoundly. Anyway, in summary, despite some short-term weakness, Alphabet, Facebook, and Microsoft are safely in what I would call my phantom FANG portfolio. Amazon has apparently decided to head lower after rallying but failing to advance beyond its HB3. Nvidia, which has actually become a very sweet trading stock, it's met our upside target and is setting back now, with, in particular, the weakness in the cryptocurrencies. It's close enough to its HB3 again that it's entirely possible that we are about to get another trade out of this stock. I've been extremely wary of Netflix for some time, as you are all aware, and in early April it gave us a further sell signal. You have to go back a full 5 years before you would find a valuation in price-to-book terms as low as the next downside target for this stock. I myself think that the stock is losing altitude as its growth rate visibly slows. And my only question is, will the company start to lose its return on equity as well? Well, we can't answer that question today, but here's a heads up. And you should always know what to be watching for in the back of your mind. That leaves Apple with great numbers, but no apparent follow-through, with a confirmed sell signal. And now the big question is, what lies ahead? If you're a client, you know our view of the market right now, and we will continue to keep you updated during our client webinars, so make sure to attend every Tuesday. If you're not a client, but want to take that next step in your personal investment journey, send us an email at info@strategicanalysis.ca telling us about where you are, and we will see if our service can help you get to that next stage. For now, what are your takeaways for this week? First and foremost, of course, If you recall what our market charts showed you last week, then you know that overall we are bullish on the overall market and that the upside remains fairly considerable from here. Even if the values are extended, and a number of pundits and commentators are bewailing the current risks in the market, you should know that we've been here before and that more is clearly possible. Second, the FANGs are looking tired, with a couple of exceptions. But third, that doesn't mean that we're going to relegate them to the trash heap of market history. As we have already seen, there's going to be a lot of trading opportunities in this group of stocks. Indeed, as has been the case in the past with similar groups of stocks, whether they were the Nifty 50 or the dot-coms, once investors have fallen in love with a group, they are very reluctant to abandon them and will keep trading them for years to come. Just remember my chart of Coca-Cola from 1998 to 2005, which I showed you twice, I believe, and which shows you how slowly growth stocks die and how many trading opportunities they provide. I may well be doing this for years, and you will be making a lot of money for years as well. Anyway, for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.